What's up traders, Tom here with another video. Today we'll be discussing FOMO, or the fear of missing out effect. Yesterday it was announced that a vaccine from a company called Moderna has shown positive results. We also have Jerome, the printing press Powell, saying that he now has unlimited liquidity at his fingertips. And the S&P 500 has approached the most important resistance level for the last several weeks. Let's take a look at all of this. Stay tuned. So I'd just like to remind everybody that if you're enjoying our content on the financial markets, make sure to hit that subscribe and of course the bell icon to receive more financial content. So it all starts here, a sea of green. Every company, or at least most sectors, all up and some up very, very huge. So why has this happened and why are we at such a critical point? Well, the first thing is in an interview with Powell, Jerome Powell that is, I'll call him the printing press from now on, he has said that GDP could shrink more than 30%, but that he doesn't see another depression. And these are amazing figures. Obviously, everybody knows this. Everybody knows this is crazy. But at the same time, this is the power of the Fed and what they're seeing. So he basically said in his 60-minute interview that he sees GDP shrinkage could be in the 20s or 30s in terms of percentage, which is unbelievable. But then he straight up after that said he does not see the economy entering another depression. And he said that the country would be even in a better place than it was before the crisis hit, and that it wouldn't even take that long. So this is a pretty bold statement from Jerome Powell, and it shows that he really is trying to reassure everybody that not only could any news come out, that the Fed is able to support the economy. And that is part of the reason why we are seeing this huge move up over the last 24 to 48 hours, and indeed this big bull rally from the bottom in March. So let's now talk about FOMO, or what as many people are finding it is frustration with the markets. And I can see why. I've always said to a lot of people on this channel that while I might hold some longs, I am still frustrated that the market is currently superficially held by the Fed, and that the monetary system has become what it has become over the last couple of months very quickly. So here we have Tony Dwyer's basically comments, and the only reason I bring this up is because he has three phases of recovery. So he has the panic phase, the relief phase, pretty standard, and then he has the frustration phase. And I'll rename the frustration phase to the FOMO phase. So this is basically the phase where a lot of people will be trapped and a lot of people will just get into the market because they're too scared to have a conviction. And on this channel, I always say you must have convictions in your trade. Whether you're a bear or a bull right now, I'm sure you have good reasons to be both, and there are valid sides like there always is in the stock market. I'm obviously a little bit more bearish than most people, but that's because, in my opinion, I don't mind being on the sideline, and I see it as if the stock market gets away, there'll be other asset classes and other investments for me to look at in the future. That could be in housing, it could be in gold, it could be in Bitcoin, it could be in another asset. There's always an opportunity around the corner. So the fear of missing out, I think, is really driving this market, and we see it with the lowish volumes that are coming through in this high end, and also with the general expectation of a lot of big money managers. So people like Warren Buffett, of course, have sold some shares. This is pretty historic. Warren Buffett does not generally sell shares. And many people, including Druckenmiller and other people, have said that the risk to reward ratios on many stocks, or indeed just the indices as a whole, don't make sense to them right now. And we've discussed this on the channel. I tend to agree, but I do think that you can always go into any stock market and find opportunity. So we will cover some stocks that could potentially be opportunity on this channel. And remember to subscribe, of course, if you want to find out more about that in the future. The next part of today, before we get into the technical analysis and taking a look at the market, is the hope for the cure, or as I put in the topic description, the miracle. So this is the euphoria that is currently running the market along with Jerome Powell's printing press. And basically it is that a trial was run where doses were given, and I think it's 8 people in general show positive results. And those positive results have led to the idea, or ignited the idea, that we have a solution around the corner. And I don't think it's any question that eventually there will be a vaccine for the market, but I wanted to bring up just this quick article. And this is obviously opinion. I'm not saying it's completely correct, but this is the general timeline for vaccine production. So I'm not a medical expert, but this is just an article that's out there on the New York Times. So this is the general production. Now, obviously you click this button, I quite like this, and it shows you the goals between the different phases. So we've just completed the phase 1 trial. And then of course you have the phase 2, phase 3, manufacturing, building factories, approval and distribution. And if everything worked as planned, and remember the day at this point was April 30th, then the phase 1 trials would be done a little bit after what this is showing here. And then of course, August 2021 on the fast track. So we still have a lot of time, even if this is the vaccine, which it may not be when we look at phase 1 to phase 2 trials, before we have a vaccine that can be distributed. The market wants instant gratification. So basically, if it doesn't have that instant gratification, then the next problem comes in. And Wall Street and everybody on the market will always find another reason to potentially scare or potentially start selling off the market. And that's why often it's the stupidest reason and the one that no one's looking at, and they'll use that as the excuse to sell it. So phase 1 trials, you can see here around 37% of vaccines fail, and less than 10% of drug trials are ultimately approved. The next one in phase 2, 69% fail, and then 42% fail after that in phase 3. So just because something passes phase 1, which in this case was only 8 people in terms of the success rate, it doesn't mean that it's going to get past phase 2, phase 3. There's so many different vaccines out there, but I think that it's premature for the market to think that this is going to be the solution. And many people will probably agree with that. And it is something where I believe that the market might go up on it because it's the good thing to do right now. But the main reason they're doing it is to trap retail traders, to trap the herd mentality. And right now, the herd mentality is still bearish. You can see that with most people making videos about this and most people talking about this. And until people stop to believe and they all believe in the bullish move, you won't usually ever see the bearish move. And that might be unpopular opinion, but generally it happens. Last year, the market could do no wrong. The market was amazing. It was bullish. Everything was great value. Anyone that said it was bearish was obviously kicked out of the room. Oh, you're stupid. You know, you're not going to do very well. This year, we have real reasons to be bearish, yet it's starting to become, if you are bearish, you're stupid, you should get on the Fed train. And I think while the Fed can hold the market to a degree, it cannot hold it from every single piece of economic news. So that's something to think about. This phase 1 trial is not enough for the stock market to move up over time. It will require more federal stimulus, more stimulus from Congress, more just general stimulus for it to get higher and higher and higher, because it's not going to do it based on what we're seeing in the economies right now. So from a technical analysis standpoint, let's take a look at it. Effectively, we are still trapped in the range. 2800 did not close below, at least enough for us to say, okay, the bears are in control. And right now we're sitting at this 29 kind of 50 pre-open. You can see 29.53. And that's where it closed. And until it gets above that, it will probably rotate. It would go to like 3,000, come back, roll reversal, and then potentially all the way up to this 31.50 high. Now that's the bull case scenario, but they haven't won yet and they haven't pushed it through. Generally, what you'll see with a market like this is you would notice that this distance will happen again. And if this distance is proved by something in the market, like it is here, where it is proved by the previous high, it makes more sense and gives more of an idea that that is what's going to happen. It's going to get to this point. Again, it will need to close above, and you will need to see a clean close where the market has pushed to a higher level and shows that the bulls are fully in control from a price action standpoint. Pre-market, things get a little bit different. This is the futures of the S&P 500. We have a bit of a sell-off. It actually hit 29.80 in pre-market in terms of the futures, and then it sold all the way off, and it's trading currently at 29.43. So today is pivotal if the bears are going to get back into control. And when I was looking at sentiment before, I was looking at how many people are actually long, how many people are short from the retail community. It is getting so close now where the bears aren't anywhere near as high as they were 2 to 3 weeks ago. So you're seeing a lot more bulls come into the retail herd. We're probably at around a 55-45 split at the moment, and that is getting close to the point where you could see things tip. Remember, I've always been a believer that whatever the general retail market's doing, most of Wall Street is doing the opposite thing because someone makes money and someone loses money. So I'm not really one to go with the general herd. I don't like elevator talk. If something comes into the elevator and people say, oh, it's ridiculous, it's over, you know, this market's amazing, I'm going to buy every single one of the banks, I'm going to buy all the tech stocks and everything's great, then I don't actually want to necessarily be in that market. But when everybody is not really talking about it, but it's there, I'm cool to stay on for the ride. But when everyone's talking about something, you want to usually get off that elevator and go back into something else for that period of time. Here is the NASDAQ. NASDAQ is about to fully V-shaped reverse. So this is just phenomenal. We had that big sell-off followed by a huge pickup, and we are close to all-time highs. So from a V-shaped recovery on the NASDAQ, it is very close. Remember when we looked at that S&P 500, basically if it gets back to the point where it was through that channel, and the channel goes to that 31.26, you would pretty much see the NASDAQ topping out at a new resistance, and possibly something like the pre-GFC kind of thing happens where it makes a new high and then it sells off. All of this is possible in a market like we're seeing right now. So it is pretty amazing what we're seeing, and if you're partially long, it's awesome. If you're purely bearish and sitting in cash, it's a little bit difficult. But the key of today's video is that you shouldn't ever have FOMO. You must have conviction in whatever you believe, and go and do the proper research and studies and everything that you can do to try to get on board. Would it be better to be long in indices long term? Absolutely. If you're not long indices over the long haul, like Buffett or somebody else, then you generally will fall behind. Staying in cash forever is not going to work out. But just because you miss one asset class doesn't mean you miss all asset classes. Where you want to see confirmation breaks, always look to the actual market, not to the futures. I've mentioned that in previous videos. Look at the actual market. Make sure that you have confirmation closes above or below from a price action standpoint, if that's what you're looking at, and that you have that on the real market, not on the futures market. So that is important. Another thing I think you want to be doing as a trader right now is that you want to be very well aware when specific people are talking from the reserve banks. So if you have Jerome Powell talking and you are not paying attention to that news, or you don't know that news is coming up, you must be very well aware. So hopefully everybody's enjoyed this video today. If you have, make sure to like the video, comment down below and let us know your thoughts. And of course, subscribe and hit that alert button. Happy trading, everyone, and have a great week. See ya.